Hello. Yes, I am from decisionpoint.com, and today I'm going to talk to you about the price momentum oscillator, and in particular, how to use it to find pure strength in a stock that's moving. So you're getting the momentum shift, but you're also noticing where the strength is and whether we have pure strength versus weakness, diminishing strength. We'll talk a little bit about all of those as we go through, but I wanted to start off with giving you an idea of who I am and what I have done. I have a bachelor's in mathematics from USC, a master's in science, Master of Science for Information Resource Management. I've been studying the markets for over 30 years, and honestly, I think since I've done this slide, it's even more. So it's been quite a while. Yes, let's see, there you go. You'll also find me at decisionpoint.com. I'm the Vice President and Senior Technical Analyst there. All right, so what is Decision Point? Well, it was created by my father, Carl Swenlin, in the 1990s, and it's an analysis process. We kind of have an analysis process that we use named after our company Decision Point, the Decision Point analysis process. We have various timing models and indicators. We also do a Decision Point blog, a Decision Point alert blog, a Decision Point diamonds blog, and then we've just introduced our new scan alert system that I think everybody might be really interested in that's attending this particular thing. Hold on, my dog needs out. Usually he likes to attend my presentations, but I guess today he did not. All right. So the decision point analysis process, we want to keep it simple. We want to identify the market bias. We look at indicators at that point. We then identify trends because you can't invest in the market until you're comfortable with what the trend and the condition is of the market. So is it overbought? Is it oversold? Is it looking stronger, weaker? All of those things. So that's the condition of the market. So we want to know what the trend is and we want to know what the condition is. We need to know these before we can go and buy stocks. It's really critical to know what the market is doing in general because half of your stock's movement or more is going to be affected by what the market's doing. So you really need to know what the market's up to and understand the trend and condition. That's what our DP Alert blog does for you. And then we do some special studies, sentiment, relative strength studies, various other things that we include in our decision point alert. But today, what I want to talk to you most about, if I can click through, is identifying conditions overbought and oversold. We're going to talk mostly about the PMO, and that is our primary indicator for identifying the condition of the market. So some of the ground rules, if you get a timing signal like a PMO crossover buy signal where the PMO crosses above its signal line, that is an attention flag. That is not something you should just immediately trade off of. I think most of those of you that I'm out here talking to are familiar with this, but just remember with any system, with any type of timing signals that you get, you really need to look at that chart. And that's what those are, attention flags. And then if you apply that critical thinking to the timing signals, that's going to be where you're going to get your success. Weekly and monthly signals, you should be aware, need to go final, meaning at the end of the week, that's when the indicators are closed. That's when the price is closed for the week. And then you look at what the signals are. Don't settle for a stock. There's no need to settle because great setups will happen. They always happen. They're always out there. It's a lot harder to find them in a market that's in a bear market, but they're still going to be great setups, whether they're shorts or whether they're longs. So let's look at the condition with the price momentum oscillator. So let me tell you a little bit about it. It's a rate of change ratio. So it's very similar to the MACD and the PPO. We can use it for historical comparisons because it is a rate of change ratio. And we can use it for relative strength comparisons. You can actually take the value of the PMO on one stock and compare it to the value of the PMO on another stock and understand relative strength. One is relatively stronger than the other if the PMO value is higher. So it's a really nice indicator that way because with the MACD, you can't do that. It's very similar in behavior. You've got divergences, a center line, which is the zero line, and it does, of course, measure momentum. But it's different to the MACD and how it's constructed. The MACD is a difference between EMAs. Ours is, the MACD is unbounded, so you can have it go way, way up and way, way down, whereas the PMO will typically stay within a range. And you really can't do overbought and oversold analysis, in my opinion, with the MACD because it's unbounded. You could have the MACD just continue rising. Generally won't have much of a range. I mean, it can, but the PMO is really nice and strict within its range. And you can't do relative strength analysis by comparing values of the MACD to another MACD. And you can't see historical values. They're not necessarily visible or helpful with the MACD. Here's an example of the PMO versus the MACD. This is a weekly chart, and you can see up here, this is the PMO. It gives you kind of a typical range that it runs in. You can see oversold positions here. You can see another oversold condition here, and here's another oversold condition here. You can see that these conditions match pretty well with price bottoms. The MACD, on the other hand, you can't see what the prior data was at all. So it's just not as helpful. So what is the PMO? Here's for you math geeks and math wonks. Go ahead and take a picture of this. I don't really want to go through the entire function, but we have a smoothing multiplier. Then we have a smoothing function. You use these two to come up with the PMO line. And the PMO signal line is simply a 10-day or a 10-period exponential moving average of the PMO line. So that's how you get the signal line. I use the PMO for positive and negative crossover signals. I think that's kind of an obvious. I look for momentum reversals. So obviously tops and bottoms in the PMO are very useful. It gives you what's overbought and oversold. You can see, like I said, a typical range for the PMO where you can't do that with the MACD. It's a pure strength, pure weakness kind of indicator as well. Just based on where it's located and how it's reacting, you'll be able to pick out pure strength and pure weakness within a stock. And then there are varying degrees of diminishing strength and diminishing weakness, new strength, new weakness. We'll talk about that on some of the charts I have for you later. It's a confirmation indicator. It's really good to confirm what's going on with price action. I love it for that. So here is a typical PMO chart, if you will. This is a daily chart, and you can see obviously the crossovers in red are negative, the blue are reversals. So you can see that typically you get the crossover sell signal and you're going to have some decline that will follow. You get a top in the PMO, that tells you to keep an eye out for a possible decline. We got a decline, we got a second decline, and that's when we got the PMO sell signal on the crossover. Here's where we had the shift in the momentum moving higher from that bottom. That was an indication that we should pay attention. This could be a bottom. We got the crossover signal and we got the follow through. Now I would say you can notice that we didn't get that much follow through up through here. And that is likely due to the fact that the PMO was rather negative when we got this signal. So that can also alert you to whether the signal is going to be strong or weak. And obviously weakness is in below the zero line and strength is above the signal line. So here was another shift in momentum. You got the indication that you should start paying attention for a decline. We got the decline. We had follow through on that decline. But again, it happened in positive territory. So while we did get the decline, it maybe wasn't as bad as it could have been had the PMO been below the zero line when we got that signal. For example, here's a PMO crossover buy signal right here. It occurred below the zero line and it was barely moving up. And you can see that while it was moving up and gave us the crossover on this particular rally, it wasn't very strong. And that led into a decline. You could see where the PMO topped here below the zero line, which is pure weakness. And we saw the follow through to the downside. So that's something to pay attention to. Like I said, where is your crossover occurring and how is that set up? There's the PMO ranges. So like I said, with the PMO, you can do overbought and oversold readings. The best way though is to look at whether the range is telling you whether you're overbought or oversold. In this case, when we look at this chart, it looks very much like the PMO is overbought right here, or it doesn't appear that it's overbought because we've had higher readings. So you're like, well, it's not that overbought, so I'm not going to be so concerned. But if you go back and look at the PMO range, it's actually sitting at the top of its range. And the way you can get the range is simply by moving out your time period to about 7 years, 7 to 10 years. That's even 5 years will give you a pretty good understanding of the range of the PMO, so you know whether you're overbought or oversold. So finding pure strength. If the PMO is above the zero line on a crossover buy signal, that is pure strength. I mean, you've got the crossover that you want and it's sitting above the zero line, that is pure strength. Now I will say, because there's gray areas, if that PMO is above the zero line, but only just barely above that zero line, then your signal is probably looking at new strength, but not necessarily pure strength. I can tell I'm going through this very fast, so I'll try and slow down just a little. If the PMO is flat above the zero line, now you might think that a flat PMO is a bad thing. It's not a bad thing. It's the PMO, if I could explain it, I would show you with my hand signals here. But basically, think about the PMO as the accelerator on your car. It's measuring how far your foot's being put down on the accelerator. It's measuring how you're pulling up off the accelerator, and then it hits a steady speed. So you're on a nice rise, you're getting a rising trend. The PMO is going to flatten because there's not an increase in the slope of that line. So you're kind of in, basically your cruise speed. So you're going to have a flat PMO because you're not pushing on the accelerator. But conversely, you're not taking your foot off the accelerator either. So that's a really good way to look at the PMO. So when it's flat above the zero line, that tells you you have a nice, steady rising trend, or you have a lot of momentum that has already been built and is holding strong. The distance from the zero line, like I said, determines the strength of the move. So if this is occurring just above the zero line, if you get that crossover, it's above the zero line, but it's just barely above the zero line, that's not strength. That is telling you that there is not weakness, but there's not pure strength in that move. It could be new strength, but it's not pure strength. So we also need to know what pure weakness is, because obviously if you're looking at a chart, you want to know if you're looking at pure weakness or not. And you want to see when it comes out of that weak period, because if it's showing pure weakness, that means it's likely very oversold. So the PMO below the zero line on a crossover sell signal is an automatic pure weakness. I mean, if you get a top of the PMO below the zero line, if you see a crossover sell signal below the zero line, that's pure weakness. There's nothing good going on that chart unless it's setting up for a short. And of course, you could use pure weakness for shorts. If the PMO is flat beneath the zero line, that is also showing pure weakness. So again, with the accelerator, you have pulled up on that accelerator so much that you are slowing down, and now the PMO has to flatten out because you're not going to push the accelerator. You've hit cruise speed at that low momentum level, and now it's flattening out, and it just means that you have pure weakness going on. The distance to the zero line determines how weak. It's very similar to what we're using for finding pure strength. Again, so if you have price, you have the PMO turning up just, or turning down. Okay, so if you have the PMO well below that zero line, you know there's pure weakness. And if it's closer to the zero line, then it's showing weakness, but maybe it's not pure weakness. It's just diminishing weakness, or maybe an increase in some weakness. So now I have my examples, and we have about 20 minutes to go through them, which is plenty of time. So I might end up finishing up a little bit early, or I'll be able to do some live examples for you. We'll see how that goes. All right, so here's an example. This is a chart that I pulled yesterday, and I will tell you that it's gapped up today. It's up 30%. Arcadium Lithium is, I can't remember what company it is, but they're buying out a particular lithium type company, materials company, and so we're getting quite the move to the upside right now. But the PMO was already signaling that that new strength was coming in. And I'll show you that right here. So the PMO rose, it got above that zero line. That means we have new strength. Now, certainly we were getting some strength through here. And honestly, at about this level, I would have looked at it as new strength, because we had the PMO putting some margin between it and its signal line right there. So I think that would have been considered some new strength at that point. But when it gets above the zero line, that's for sure new strength. And so the PMO had already given us a crossover buy signal down here, but we were still looking at what I would call diminishing weakness. Because really, if you look at this, the PMO is kind of flat beneath the zero line here. It's only, moving up and down below zero, and you can see that is showing weakness. So back here, we had pure weakness. There's a flat PMO below the zero line, and you can see exactly what was going on with price here. Now, you had back here, we got a positive PMO crossover, and so that came up, and you got this little rally. But this was the end of this pure weakness stage. This was diminishing weakness. So we got some upside out of it, but we still didn't really get any new strength coming in. It did start to signal that we had new strength back here, and price kind of flattened out at that point. It was still in a rising trend, but it flattened out. And the next thing you know, we had a PMO top come in right about here. The crossover sell signal came in here. And of course, we see the down move that came after that. So the one thing to keep in mind is that when the PMO is very low, like it is here, when it does start to turn up, or you do get these crossover buy signals, remember, we're paying attention to how far beneath the zero line we are. And in this case, we are very far beneath the zero line. A lot of stocks are going to be plus or minus 4 as their range. And you can see the range of this one right now is at 6.23 on the upside. You can see on the bottom side here, it was minus 7.5, which tells me that the top of this range is probably about 7.5. So the PMO is starting to get overbought. And I would guess after today's 30% up move that it's getting very overbought. Here's another example for you. And I do have all of these other indicators on the chart, and I apologize. I really should have gotten those out of there to make it a little clearer as to what's going on in the PMO. Next time I do this presentation, I'll definitely fix that, especially since it looks like the screen is a little bit small here. All right, so let's look at this one. We have pure strength coming in here. Look at the PMO got really, really flat. And it even kind of moved down just a little bit, but that's okay. It's above the zero line. It's flat above the zero line. Even though we got that crossover sell signal back here, it still stayed rather flat. And you can see that we still had the price rising. And that's because that PMO was so far above the zero line that even when we got the sell signal, it was a sign of diminishing strength, not new weakness. So we didn't have quite the same strength we had in this move back up here, but we did have strength as this rising trend continued to hold with the PMO moving in flat above the zero line. Here's new strength. So we had the PMO bottom just above the zero line. So that's new strength. We got the PMO crossover buy signal above the zero line. That's pure strength, but I would caveat that with, in this case, it wasn't very far above the zero line. So we were taking a little bit of a chance that this wasn't pure strength, that it was just some new strength. And here we got that nice move off of this crossover buy signal, but it was still not, it was just new strength. We got a little bit of a fade here, but the PMO was staying its course and staying flat and staying higher, and moved above its signal line and stayed above its signal line. And that gave us the good sense, the sense that we would see higher prices, and that's what we got. All right, so let's look at our next example. All right, so in this case, I've marked pure weakness. Now the PMO got very flat here beneath the zero line, but it wasn't that far beneath the zero line. And you can see price pretty much held up during that period. But we really were still experiencing pure weakness. And as soon as this PMO turned down, we were looking at even more weakness. You got the sell signal back here. So we knew that we were going to see lower prices, and sure enough, that's what we got, was much lower prices. Now back here, we did get that crossover buy signal, and we did get some upside out of it. But remember, it's well below the zero line, so we can't expect that much upside to come out of it. Now we could get a lot of upside out of it, but it's below the zero line, so we have to be more careful about our expectations. You can see the PMO started to put some margin between it and its signal line. It did give us a signal that we were getting some new strength coming in, but then the PMO topped here beneath the zero line, and that told us it was kind of a fake out breakout, and we ended up with it moving lower. Back here, though, this is where we started to see the PMO finally get above the 0 line, and that is new strength. And you can see it came in at a really good time. We had the PMO moving much higher. Now we have pure strength when it's up here, lots of margin between it and its signal line. You know that we have a lot going on that's good. Now back here, you can see the PMO topped. That gave us the attention flag that we needed to have our stop maybe placed or tightened. Certainly when you got the crossover sell signal, that would have been a sign to tighten your stop. You were already experiencing a decline here. You probably didn't even have to wait for that crossover sell signal before you were going to get out of this particular stock. But look back here, the PMO came down, started to top or bottom above the 0 line. And so now you can see that we had new strength building here. You got a PMO crossover buy signal above the 0 line. That demonstrated pure strength. And now you've got the price rising very strongly here on Elliott Systems ESLT. Again, this was a stock pick, or this was a chart that I picked out yesterday for this presentation. So this is looking good right now for some continued move to the upside. Now, I would mention that the RSI in this case has gotten overbought. So there is that chance you're going to get a pause, maybe a little bit of consolidation there to take that out of overbought territory. And then just to give you a sense of the other things that I study on a chart, this is on balance volume right here. I think on balance volume is just the greatest thing. It's so easy to understand. It gives you a really good sense of what's happening with volume patterns. All it does is it takes the volume of that day of trading, and if it was an up day, it adds it to the OBV line, and if it was a down day, it subtracts it from the OBV line. So you can know based on where the OBV is going, if you've got rising bottoms like we have here, that's just a confirmation that things are going the right way on this. Okay, the stochastics I like to use as well. Stochastics I do not look at as an overbought and oversold indicator. I think of the stochastics as sort of a measurement of internal strength, and I want internal strength at the top of the range. And you can see back here, the stochastics also moved up. We had the stochastics staying above 80, and that was a sign that we had internal price strength, and that was just a confirmation that came in as we were getting this new strength here on the PMO. So I think the two of them work very, very well hand in hand. I also like to look at relative strength. I look at relative strength of the industry group to the S&P so that I know whether I'm in a group that's showing some strength. I look at the stock compared to the S&P. So in this case, ESLT is moving upward in relative strength against the S&P. And then I also look at the stock versus the industry group. And that gives me a sense of whether I have a leader within that group. I want to see it performing well against the group. And you can see ESLT had started to outperform its group as well, right about here. This is where we're getting this bottom right there. So we had a really good sense. We had the stochastics had already moved above 80. We had relative strength already picking up. This one was really set up well for an investment on that PMO bottom and certainly on the crossover. Generac, GNRC, I picked this one yesterday. We had a filled black candle yesterday, so we could be seeing a decline today. I'm not sure, I haven't looked at the chart. But here is a really great indicator of strength. First of all, the PMO, if you look at the entire chart, the PMO has spent almost the entire time above the 0 line. So that's why we really haven't seen any major declines here. We saw one back here, but the PMO obviously gave us notice and it continued to move down. We got some new strength peeking in here, but it was right at the zero line. So that was really a kind of a neutral signal. Didn't turn into very much. PMO already faded. There's some pure weakness here as price moved mostly sideways. Again, pure weakness is flat below the zero line. This is flat beneath the zero line, but again, the location. It is below the zero line, but not that far below the zero line. So while this was a sign of some pure weakness, it wasn't as weak as it could have been through here. We moved mostly sideways, and that's because the PMO was closer to the zero line. This is what I want to see, is pure strength. I want to see a flat PMO. I want to see it staying above the zero line like it did here. And you can see that when we came in here on this PMO buy signal, or we waited for new strength when it got above the zero line, that got us in back here. The PMO continued higher. We did have some pullbacks that occurred, but ultimately price did continue to move upward and show that pure strength. We saw diminishing weakness here as we got that crossover sell signal. Price was already moving down. It was a sign that we were getting some weakness, that we needed to be careful. And we did end up seeing the price moving lower with the PMO as it moved lower. Then we got some new strength, crossover buy signal right here, came in time to gather this particular move to the upside. We had new strength come in here as you got the PMO bottoming right about here. You got the sign that we had that new strength. You could get in at that point. We did. You've got it moving higher. PMO gave you the high sign, the low sign maybe, that it was time to probably consider getting out or tightening up a stop. And that was when you got that crossover sell signal. But again, it occurred above the zero line. So this is more of a sign of diminishing strength, not necessarily new weakness. New weakness comes in when you get below that zero line. That's your new weakness. And we saw some weakness, but not a lot, because again, PMO was not that far beneath the zero line. All right, I still have, I think, one or two more examples here. Pure weakness, let's see. So here's new strength building off of the PMO coming out of the zero line and moving higher. Certainly the PMO was very instrumental. You had right here a PMO bottom above the signal line. I call that a PMO surge. That was a really good sign that things were going the right way for this stock, Supermicro. I think most of you are familiar with this one. And you can see that it continued higher and built margin between it and its signal line the entire time. This is where things started to get a little bit messy. We had that strength showing back here. We had the pure strength, but then we got that PMO crossover sell signal. That was a sign that we had diminishing strength. And as it continued to move lower and build margin between it and its signal line, that was a sign of new weakness, and that continued on down. We ended up with a neutral. You can see the PMO got flat right on the zero line. That was a sign that price was moving sideways and was going to continue to. Then we saw the PMO give us a sell signal move below the zero line back here. That would have gotten you out before this big decline. Now we saw some PMO buy signals come in here, but this is a flat PMO below the zero line. This was a PMO sell signal below the zero line. That is pure weakness. Now we are starting to see some new strength come into Supermicro, but the PMO is still below the zero line by quite a bit. So I would be very careful about whatever rally we start to see here, because the PMO is still below that zero line. We're seeing diminishing weakness right now, not necessarily new strength. So we could see some price action move a little bit sideways, maybe melt upward because the PMO is melting upward. That's what I would be looking for with super micro. Here's a sign of pure strength on Western midstream. PMO is mostly flat above the zero line. Really, because it was so far above the zero line, even when we got this crossover sell signal, it didn't turn into much of anything because price was so far above the PMO was so far above the zero line. And even though it started to release, that just meant our foot was kind of coming off the accelerator. We were still moving forward because when you're moving on the freeway and you put your foot up off the accelerator, you're still moving forward. And so the foot came off the accelerator here. Things slowed down. We ended up with kind of a flat price action. But there's your new PMO buy signal back here, get you in. And again, just knowing that the PMO is so far above the signal line, that could have prevented you from maybe getting out too early. All right, came in just at the right time here. All right, so as you can see, we have two reports, the decision point alert and decision point diamonds. They are, first and foremost, the decision point alert is where you're going to find out that trend and condition of the market. Remember, that is key. You really need to know what's happening with the market before you invest. Most stocks are going to rise with the tide, and most stocks are going to fall with the tide if price starts to move lower in the market in general. So you need to know what's going on in the market in general. Decision point alert does that for you. Decision point diamonds, I take my scans, which use the PMO, and I pick from those scans the best looking stocks and present 10 of them per week to you with complete analysis. And I call them my diamonds in the rough. They tend to do pretty well. That's why I sell my newsletter. Right now, you can get 50% off your first month of any of our reports. They're very affordable. We want to make these accessible to all investors because we think they're that important. You can see the decision point alert. Like I said, our cornerstone is only $50 per month. Diamonds are only $80 per month. If you take and get one good stock pick out of diamonds, you've paid for your year of diamonds. It's totally worth it. Decision point scan alert system is brand new. If you want to get all of the results from my scans sent to you in your email box at the end of the day, you can do that for $29 a month. Now, if you get any of our subscriptions, we have chart lists, which include all of those trend and condition charts. We have an ETF tracker with over 100 ETFs in it, so you can follow those. And special deal, save 50% off your first month. Just use the coupon code SAVE50. And that is the completion of my presentation.